What's up, guys? Welcome back. Today, let's take a look at the best pattern that has been working in the stock market right now, and that by far right now is the red to green pattern. It's been having a high hit rate the past few days, so I do want to dive into a little bit of analysis of the past few stocks that have been forming this red to green pattern and resolving to the upside. So for the red to green pattern, what I look for is a pre-market gap. So all the stocks that are on the pre-market gap scan, we want to take a look at that. Today, BNZI was one of our leading gappers. Pre-market went from 440 up to 737, then started to consolidate right under VWAP, but still holding relatively high. And so what we've been seeing is at the open, some profit taking, maybe some short starting the position with a stop near the highs, or with a tight stop over a pivot level, and the stock goes red on the day after the open. So after the open, we go red on the day, and then not too much longer later, longs start to accumulate off the lows, start to buy off the support level with maybe a stop at the low, and the stock starts curling up. The stock starts curling up, and when the stock starts curling up, shorts start to panic into the highs, and we see a nice move. So that's what we've been seeing on these pre-market gappers, these low float pre-market gappers coming into the open. BNZI is a perfect example of this. And not only did it stop at 791, we consolidated again and trapped shorts again through 8, halting up and making a move all the way up to about 1050. So BNZI is a great example of the red to green move. This is definitely one of the patterns that you're going to want to master because, this pattern consistently comes back through and starts to become more apparent, in certain seasons of the market. So sometimes, we'll stuff in this area. Sometimes we'll stuff in this area for the retest. But then sometimes, we'll have so much strength there, shorts will be trapped and we'll be squeezing. So sometimes, the patterns come in and out of season, and right now I've been seeing that the red to green pattern has been working more often. So BNZI is a good example that you can take a look at, especially if you have your screen recording or an on-demand. You can watch that in real time. That would be a very good idea. And so what you can do as far as entry on BNZI, you could take an entry off of the low, off of the dip. You could take an entry for the breakback over VWAP or the 90 MA in this situation, or you can take a breakback over 7. If you didn't get in off the lows, you can get in for the break over 7, for the break of the pivot, and the break of the whole dollar for the squeeze. So that's BNZI. Another stock that we saw recently was LUNR that also gave us that red to green move a couple days back. So LUNR here, not quite gapping up pre-market, but we did have a nice run here from 5 up to 9 in the previous few days. So it is kind of a multi-day continuation with higher relative volume, so it does still fit our criteria. And at the open at LUNR, we go red on the day, we test our support, longs start to accumulate, and we squeeze through the pivot and through the pre-market highs and the previous day's high, squeezing out shorts and making the move. So similar sort of action with that red to green move that you're going to want to study, that we've been seeing a lot recently. So you could either taking a trade here off the low, or taking a trade for the pivot back through 915, 920, or you could have taken an entry here for the break of 946, which was the high after the open, which is another key level. So that was LUNR. Another one recently, today we had SEEL, SEAL. This one also had that red to green move. So at the open, similar price action or pattern as BNZI. So nice pre-market gap from 20 cents up to 44. Holding relatively high. We dipped down a little bit, but we reclaimed VWAP, which is good, kind of consolidating. Had some profit taking, maybe some shorts got aggressive here at the open, but the longs were supporting it, we're soaking it off the lows. Curled back up. Once we see this candle, then you're going to want to look for that trade for the break back over our key level which would be where shorts would have their position. So let's say, shorts are, if they didn't get in here, they're getting in, at 42, 43 on this rejection candle, anywhere between 41 and 42. So once we start to reclaim, longs are soaking here, and it starts to reclaim 41, 42. This is where shorts are going to be looking to potentially be stopping out if we break back over this key level here of 44. And that's what we got. We got a nice trap. Short started squeezing, and we got a break all the way up to 50 cents, pulled back, holding a higher low off of the 90 MA, and continuing to break 50 all the way up to 54 or 55 cents a share. So very similar pattern on seal as well. Going red on the day, long soaking, and now going green on the day, trapping the shorts. So that's another example of the red to green on seal. Another one we had recently was KAVL. KAVL again, the red to green move. So this one yesterday, this was a crazy one. So pre-market gap, 60 all the way up to 145, holding high relative volume. It had news on the day. Maybe shorts are entering your position at the highs here, right around 49.50, 51, somewhere in that area. It rejects. Long soaking off the support level or off the low here, curling back up. Now shorts are looking to stop out for the squeeze through the high. This is again the red to green move from red on the day now to green on the day. Another example today, CAPR. So this pattern has been working the past few days, and it's probably going to continue to work for quite some time until, I guess, the majority of people start to kind of pick up on it, and then it starts to work against, people are already anticipating the move, and maybe people start selling sooner than later, and the pattern stops working, or, the exits are different. And it does seem to evolve, over time. So I don't expect this to be working 100% or even 90% of the time for a long term, but for the short term, I think it's working more often than not. But who knows? 2 months from now, this pattern could completely be failing every single time. And that's, again, these patterns are consistently kind of going through seasons, so you got to be aware of that as well. Nothing is ever consistently working 80% of the time, 90% of the time, 100% of the time. It's always evolving. The patterns are always changing. And that's something you got to just keep on studying and keep on paying attention to, so you can stay profitable over a long period of time. But again, here CAPR, pre-market gap 6 all the way up to 880, red on the day, very tight dip. We dipped down to 8, and then the next candle we're ripping through the highs, squeezing out short sellers here from 850, 860, squeezing up to 924. So relatively tight red to green move. Within about 3 minutes, we go from green to red on the day, back to green on the day. Again, it can happen really quick as well. Sometimes we even see the red to green move within even a single candle. Sometimes it goes, flash dip at the open and then just ripping straight through the highs. In a really strong market, you'll see that where these red to green moves happen within seconds. But usually in slower markets, and kind of recently, sometimes it takes, a couple minutes to unfold, maybe 10 minutes, 15 minutes. I've seen red to green moves take up to 30 minutes or an hour. We've seen red to green moves not even happen until power hour. So, if I just pull up a chart, I don't have an example of a chart like this, but let's say, instead of BNZI kind of ripping so soon, I've seen red to green moves be drawn out to we consolidate all day, and then by 3 p.m. we start curling up, and then we finally get that red to green move. I've seen red to green moves be so drawn out even like this. So timing can always be different from stock to stock, but if you're looking for those key areas off of support or break of key pivot areas, or the break of the open price, or this pivot up here where shorts would have probably entered, the entry will still be there, but the consolidation period, that time is always kind of variable. So that's sort of the pattern that I've been noticing that's been working. So yeah, take a look at these stocks here. BNZI, LUNR, SEEL, KAVL, and CAPR. And again, you know, these patterns go through seasons. So, you know, I'm not guaranteeing this pattern's even going to start working still for tomorrow. So you always got to be aware of that. You know, there's always seasons to different patterns. So, but all I can say right now is I've noticed that this pattern's been working more often than not. But there's no guarantee in the future that this pattern will even work tomorrow, the next day, the next month, next week, next year. You know, we could go through a complete dead zone, you know, starting tomorrow, that this pattern just stops working. Maybe I publish this video and so many people now recognize this pattern that it just stops working tomorrow. That's obviously possible. I doubt it because I don't have that many subscribers to really influence the markets. But, you know, as people start to catch on to working patterns, you know, the patterns will eventually start to change just by the nature of the market, and introducing new patterns or new nuances to patterns to kind of keep traders on his toes. And the market's always kind of working in a way to where the majority is going to be losing money, and the minority will always be making money. So, you know, understanding that, you know, we can kind of take this with a grain of salt. You know, take this with a grain of salt. Be aware of the pattern, but the nuances of it will consistently be changing from each day, each stock, each setup. So be aware of that. So hope you guys enjoyed the video. Make sure you drop that like, subscribe if you're new, and I'll catch you guys later. Also check out the links on the description, and peace out.